Nvidia just delivered another blockbuster earnings report, with sales up 56% to nearly $47 billion and AI demand running at full steam. But investors are uneasy. Why? Because Nvidia's future in China, a $50 billion market, is clouded by politics, tariffs, and uncertainty over its H20 chip. In this video, Wealthy Business breaks down Nvidia's results, CEO Jensen Huang's comments, and the trillion-dollar AI spending race shaping the future of technology. Welcome back to Wealthy Business, the channel where we bring you deep dives into finance, technology, and the future of global markets. Today we're talking about Nvidia's latest earnings report, and while the numbers are massive, the big question hanging over Wall Street is, what happens next in China? The headline numbers. Nvidia continues to dominate the AI space. Quarterly sales surged 56%, hitting $46.74 billion, slightly above Wall Street's forecast. Adjusted earnings per share came in at $1.05, topping the expected $1.01. Guidance for the next quarter? Nvidia expects $54 billion in revenue, again ahead of expectations. For most companies, this would be an absolutely perfect quarter, but with Nvidia, the story is bigger than just earnings. It's about the future of AI spending and the risks tied to China. The China question. Here's where investors are nervous. China could represent a $50 billion market for Nvidia this year alone, growing at nearly 50% annually. That's a massive opportunity, but access to that market is politically fragile. Earlier this year, the Trump administration blocked Nvidia from selling its pared-down H20 chip in China. Then in August, Nvidia CEO Jensen Huang struck a tentative deal with the White House. Nvidia could resume sales to China, but only by giving 15% of Chinese revenue directly to the US government. That agreement hasn't been finalized, and the fate of the H20 chip remains uncertain. Nvidia management said if sales are approved, it could ship between $2 billion and $5 billion worth of H20 chips in the third quarter. That's a big if. Despite the China noise, Nvidia's core business, data centers, is still on fire. Data center revenue came in at $41.1 billion, growing 56% year-on-year. Sequentially though, growth slowed to 5% from the prior quarter's 10%. Still, Nvidia remains the backbone of the global AI revolution. Its GPUs are powering hyperscalers, cloud providers, research labs, and every major AI initiative on the planet. Huang emphasized that AI demand is only in the early stages, the AI spending explosion. This is where the long-term story gets truly mind-blowing. Jensen Huang told analysts that AI infrastructure spending has already doubled to $600 billion per year. Between now and 2030, global AI infrastructure could see investments of $3 to $4 trillion. Think about that. We're not just talking about a trend. We're talking about a once-in-a-generation transformation of global infrastructure, on par with the invention of electricity, the internet, or smartphones, and Nvidia is capturing the lion's share of that spend. If the numbers were this strong, why did Nvidia's stock dip after earnings? Because investors hate uncertainty. Analysts like Gene Munster from Deepwater Management noted that this was one of the noisiest Nvidia quarters ever, especially when it comes to China. Investors want clarity, and right now there isn't much. Despite the stock wobble, most analysts are still incredibly bullish. JP Morgan said Nvidia's playbook remains the same. Beat, raise, and keep dominating the AI market. Benchmark analysts wrote that Nvidia's results showed solid sequential and annual growth and are in no way indicative of a slowdown in AI demand. The consensus, as long as AI investment keeps accelerating, Nvidia will continue to lead. So, what's the takeaway? Nvidia is still the undisputed leader of the AI revolution. The company's revenue is skyrocketing, its technology is unmatched, and the global AI spending boom plays directly into its strengths. But China remains the wild card. If sales are allowed to resume, Nvidia unlocks tens of billions in additional growth. If restrictions tighten, Nvidia will still grow, but it may face new challengers, especially from domestic Chinese firms like Cambricon. For investors, this is the ultimate story of opportunity and risk. Massive upside in AI, but constant uncertainty from geopolitics. The bottom line? Nvidia's future looks bright, but the road ahead won't be smooth. This has been Wealthy Business. If you found this analysis useful, don't forget to like this video, subscribe, and hit the notification bell so you never miss our deep dives into the business stories shaping the world.